podcast with Investing Education Academy. We have some very interesting news about two very large companies that a lot of you all listen to probably are investing in. Both Apple and Amazon recently did something that is going to cause you to want to listen to this entire podcast because it may affect the way you play your investment with them. With that being said, I'm going to do some housekeeping and Leon's going to tell you why we chose this topic.
Yes, as Brent said, we're going to talk about what Amazon and Apple recently did. But the reason interesting is primarily because what they did plays well, like completely topsy-turvy market. So they're both going heavily that actually Brent and I suggested, well, not suggested, either last week or 2 weeks ago, was in this exact same area that Amazon and Apple are playing in, but are making bigger strides into it now. So had you followed that, stock pick a couple weeks ago, would have done pretty well, and you would have been following what Apple and Amazon. So, all right. So what happened was, so last week, big news that it was big news to me. I didn't really even see a lot of press behind it. And I caught it as a suggested link. I didn't even see on one of the main sites. They bought a company called One Medical, and One Medical is a provider. Now, sounds kind of weird, right? Like, why is Amazon buying a? Well, a lot of people don't know is that 2 or 3 years ago, Amazon bought another company, and with PillPack. So they bought PillPack to start competing with pharmacies. They haven't really made the huge waves like they have, of course, in other e-commerce. But they've made some strides. In some instances, lowered drug costs for people that are part of PillPack. Now they bought the PillPack. Now they're buying an actual primary care provider. So this is One Medical, and their stock trades on on the public exchanges, and they have physical locations, right? So think of kind of like a Kaiser or any sort of HMO where you're and you can go to physical locations or do like telemedicine, things like that. So they're a primary care provider, 1,000 members, a part of this part of their what they call membership, because they're not actually classified as like an HMO or PPO. It's actually just a membership monthly fee for the care that you get through this through their primary care. And I think that's one reason why Amazon was interested in it. That it's not a typical healthcare provider. They actually have which is different. So that's Amazon. So Amazon bought PillPack a couple years ago. Now they actually provider. That's one aspect. That's what Amazon did. Now Apple last week came out with what people report, where they laid out in detail. I mean, I think the thing is like 60 pages. Their past healthcare moves and their future healthcare moves. A lot of people, it can do some healthcare things. I'm not an Apple Watch user, so I don't know exactly what it does. Health attributes. Actually, I remember reading a couple years ago that it was a guy or girl, I can't remember. It was something happened. Am I still there?
Yeah. Mm-hmm. Yeah, you're good.
Can you hear me?
Yeah.
Okay. So a guy or girl, sorry, my phone interrupted. So a guy or girl had fallen or something, and or I can't remember the person had a health issue, and their Apple Watch actually sent some sort of signal or some sort of something to somebody, and they eventually got the care they needed. But the moral of the story is that Apple's technology actually saved this person's life through whatever the healthcare device was. I can't remember if it was the phone, the watch, or a combination of the two. But that's kind of an example of Apple pushing into healthcare. Now, so like I said, they broke down what they've done in the past, and they have a huge roadmap and runway they plan to do in the future. Another portion of another thing I read about Apple and healthcare was that Morgan Stanley, the big bank / investment banking firm, they estimate Apple can make at the high end. Now they're not saying it's going to happen, but they're saying based on what Apple's doing now, they execute really, really well and hit their high number. They think Apple can make $313 billion in revenue just from healthcare by 2027. Now, the reason that's a shocking number is last year's Apple, I think 2021, Apple's total revenue was $385 billion. So what they're effectively saying is that Apple could double their revenues in about 5 years just with healthcare alone. So that's a huge. Doubling the revenue for a company the size of Apple is massive. So the moral of this podcast is two of the largest companies on planet Earth are going head first straight into healthcare, the healthcare sector. Oh, one other point real quick about Amazon and buying One Medical. Amazon paid a 77% premium to what One Medical shares were trading at before the deal. So Amazon's paying 70%, 77% more than the shares actually say they were worth at the time to get to buy this company. That shows you how, how much of how important medical or healthcare is to Amazon, that they're willing to pay 77% more than Wall Street said a company is worth to bring that company into the fold. So you have two of the biggest companies on the planet going head first and putting a lot of money, tons of money, and a lot of research into healthcare. Now, why is that? As we all know, the baby boomers were the largest segment of the population in the U.S. It's now millennials, but baby boomers are second, and they're aging. They're being the second largest segment of the population. They're aging every day. They are a massive group that is requiring medical healthcare services every day and every month and every year. So and then you have our generation. Brent and I are Gen Xers, I think. Yeah. We're in our mid 40s, so in the next 10, 15 years, we're probably going to be needing some pretty serious, well, not pretty serious, but kind of regular healthcare services as well. So there's a massive segment of the U.S. population that is aging rapidly, and Apple and Amazon are looking to cash in on that hugely. So for us as investors, what we're saying is, if the two biggest companies on the planet are doing that, we should be looking at healthcare too. And healthcare companies like, Eli Lilly, Merck, Pfizer, there are a million of them. But you really want to start looking at these companies because their revenues and earnings and even dividend, most of them pay dividends, are pretty much rock solid. Now, not going to say recession proof, but, one thing we all can't do without is like food and healthcare, right? And then again, Amazon, Apple are targeting this hugely, going after hardcore. So I just want to kind of bring this to everybody's attention that if they're doing it, I'm looking at it, taking it a lot more seriously. Like I said, a couple weeks ago, one of our picks was actually a healthcare ETF. And I think it also paid a dividend. So, Brent and I are looking at healthcare too. But after I read these articles, I was like, okay, I need to start taking healthcare a little more seriously and make it a bigger section of my portfolio than it's been. So just FYI to everybody, Apple and Amazon moving hardcore into healthcare. And that's something you should definitely look at too. Like I said, most of the companies in healthcare also pay dividends.
Yeah, and you're talking about when you look at baby boomers, I think the millennials are 80 some million, and baby boomers are about 74, 75, 76 million. They're going to continue aging. All of us, everybody listening to this will continue aging. And even when healthcare takes a hit, normally the government will step in and subsidize the cost to just make sure, people get some type of service. Also, when you can have what's called economies of scale, they can actually demand lower price points for drugs and other things that we would need or services because they can just buy it in bigger chunks. So it makes a lot of sense why these companies are moving to the space. And from Apple's standpoint, Apple's been watching our every move for, ever. If it's through the phone, if it's through the wearables, they have so many wearable devices that they're tracking all this information. So it makes sense that if they have that, just to convey it into is vertical integration. But so another thing, they take the information. They already have the services they can provide to us. They have a means of communicating with us that already exists, and they have a proven community. All those equal to what could be a very smart play. And for those of you all who are watching, it's like, okay, so what's the move? What else is out there? This is one, and we're going to give you our picks. And what we're going to, just for everybody listening, letting you all know, come August.
Hey, Brent, real quick. I'm having a little trouble hearing you. So when you're done, just give me a thumbs up.
Okay.
When you're done speaking.
Okay, cool. Come August, this August, 2022, all of our picks are going to be in our community from now on. So, I think this is going to be our last live pick where you'll be able to go to our Facebook group and see what we chose. From August on, those picks will only be in our community because a lot of the members have expressed since it's a little bit of a rebound right now in the market. Um, these picks have been helping. So we're like, you know what? If our members are saying that they're helping and it's something they want to keep exclusively for themselves, we have to listen and we have to move as much many resources that we have into the community. So we hope you're a member. If you're not, feel free to go to www.ieamembers.com and join. However, we're going to continue to give you this advice every Wednesday, 9 p.m. We're still showing up for you all. We're still providing free content. And if you listen to this and you listen to any of our podcasts, which you can go to iaapodcast.com and listen to any of them, the information in the podcast alone tells you about hundreds of good companies that you could be investing in if you listened from the beginning or you went back through and listened to some of our picks. We've been putting ourselves in the hot seat recently, which means if you're not a member, we show our portfolio. We're showing the portfolio of stocks that we picked, and we did historical and current. Our historical performance has consistently in that our first 3 months showing up. We thought that when we dug into it with the down market, we would be down far more than what we are. I think so far we're probably positive territory of like 37% at least. And that's just on the 2 months that we looked at. I think it's actually higher than that, but I'm gonna say 37% to be conservative. Um, Imagine your portfolio being up 37% today. That would feel pretty amazing. And it's possible. It's absolutely possible. And then also to give it to you this way, if you're making 30%, 33%, somewhere in that range, you're looking at your money doubling every like 2.3 years. So that means if you have 150,000, just to give you real numbers, in 2 years you're sitting on like roughly 300,000. Now this is where it gets really powerful. That 300,000 in another 2 years is looking at about 650,000. That is extremely powerful because the next 2 years you're talking about 1.2 million. And so far we're only talking about 6 to 8 years out. So these things are happening, and Leon and I are full into it. And if the math doesn't excite you, I'll give it to you a different way. If you have a bank account and we were 8 years out, your bank account and you had 150,000, that bank account might have 155,000. Maybe it's probably gonna be 153,000. But in a proper account or doing something different, the possibility is that you could be over 1 million. So, where do you want to keep your money? We are doing these lives to help you all. Trust me, Leon and I are doing this ourselves. So in a few years, when you all you watch these lives, it might, we just hope that you join in. That's all I can say. So with that being said, Leon, am I missing anything?
So you good? All right. So other point. So other thing we'll talk about that happened today: Federal Reserve and good old interest rates. My favorite topic. So I'll make it quick. Today, Federal Reserve raised interest rates by 0.75%, 75 basis points.
And that's
now,
that's
if you were
below
following,
1%.
oh, what?
It's below 1% for anybody who's trying to figure out what that means.
Right. So if you were following the market today, you saw that the market was up, and then right around 2 o'clock when it came out, the market shot up again. Now, we've also, well, if you've been following these the last few, we've seen this happen before. The market will shoot up, and then the next day it'll reverse and actually go below where it started the day before. The reason why today may be different is Mr. Jerome Powell, the head of the Fed. He made a comment that that the market has been like salivating for, and he basically what he's all he basically said, and this is something that everybody knows, right? Like, but they just want to hear him say it. He basically said that at some point in the future, the Federal Reserve will have hit their number and hit whatever number they need to slow inflation, and they'll stop raising rates. Like everyone already knew that. Like they're not going to do this into perpetuity, but what the market is interpreting that as that's the Fed saying that we've done a lot of the work, we've raised the rates, quite a bit, and we're getting close to the end. Again, he didn't say it in that terms, but he just basically insinuated that, what they're trying to do, they're starting to see take effect in housing, commodity prices, things like that. And they're saying, but what they don't want to do, and he reiterated this too, he does not want to cause a recession, and definitely not a deep recession. So he's very mindful that, they've done 2 back-to-back 75 basis points, which hasn't been done in like 50 years. I mean, this like for Fed raising rates, this is almost unheard of. And the market has digested it well because he's been very communicative and letting everybody know, hey, these bigger rate hikes are coming. So the market was prepared. But if he keeps going down this path of these aggressive rates, it will cause a recession. Another thing he said that bit of a sign is right now the Fed funds rate is the rate, but that's the rate that they're raising. So the Fed funds rate right now is at 2.5 to 2.5. He's saying in their minds, they want that rate to be about 3.5, 3.25. Right now it's at 2.25 to 2.5. They're saying by the end of the year, they want that rate to be somewhere in the range of 3.25 to 3.5. So what does that mean? That means there's 1 percentage point more of rate hikes coming probably at the end to the end of the year. So what that really means is that this probably was the last 75 basis point raise. Going forward now, we might see 50 points, may see like 150 point and then 225 points, or 225 points and 150 point raise. But either way, their goal of hitting about 3.25 to 3.5 by the end of this year would mean another 1% raise of rates. And we only have a couple more months left in the year, and there's no rate hike in August because they don't meet that month. So what that means, and the market also looked at that as saying, okay, the Fed has said, 1, they're getting close to the end, and 2, they're only 1 point away, one point away from the number that they want to hit. So all that together means that the rate hikes are probably they're coming to an end. When that'll happen, we don't know yet, but they're probably coming to an end maybe by the end of the year. The market loved hearing that these will finally stop. That's why the market rose today. So but the other side of that now is Jerome Powell is data dependent. So if the data comes in terrible, like from here over the next 2 months of inflation being still running rampant, 75 basis point is back on the table. Maybe a full 1% raise is back on the table. So it's all about being data dependent. But he insinuated that we're getting close to the end. They're near what they call the terminal rate, which is at 3.25 to 3.5. So this pain may be over somewhat soon. I'm not saying it is. I'm just telling you what the man said. So that's why the market really took off today, was that the market sees like an end in sight. So we'll see when and if that happens.
Yeah, and this goes back to what we said a lot. It's not even that the market doesn't like turmoil is worse than a known threat. So when there's uncertainty in the market, that's normally when you see people running scared. Even if it's bad news that the market can plan for, the market will adjust and businesses will adjust. But when businesses don't know, that's when you see a lot of the volatility. So I'm guessing that with the end in mind, most businesses are thinking, okay, now we can plan accordingly, which should stabilize their activity in the market. And also investors kind of know what to look forward to. With that being said, we thank you all for being with us. If you're looking for our stop picks today, we owe you 2. You'll be able to find them in our Facebook group, and then you'll be able to find one in our Facebook group and then the other in our membership platform. However, come August, our picks are going to be solely in the membership community, because as we were looking at the numbers, we did pretty well. So we're going to let our members, really reap the benefits of some of these selections. And we're changing our communication with our community. We're going to be in greater communication with them and providing real-time notices about things as they occur. So IA is changing and we're growing and we're adding real estate to our investing portfolio. So we look forward to telling you more about that later. Leon, anything before we go?
Me. All right. So, just to recap, look at healthcare. Really take a hard look at healthcare stocks. If you're part of the membership community or you're part of the Facebook group, I would say go back a couple weeks and look at the ETF that the healthcare ETF that we picked a couple weeks ago. It's very strong. It comprises all the healthcare companies that are inside the S&P 500. So it's really solid. But again, like we said, when two of the biggest companies on the planet commit billions of dollars towards that industry, as well as tons of resources, it's something we all as individual investors want to look at. Also, Fed raised rate today by 75 basis points. They signaled it might be over soon. We don't know, but the market loved hearing that, and so hopefully this pain will end soon. But last month's inflation was 9.1%, which is the highest it's been since really this whole thing has started. So there's no real sign yet of food and energy inflation subsiding, but it does take a while for these rate hikes to get through the economy. So hopefully the one we see next month will show that July's inflation actually was in like the sevens. We're hoping it has like a 7 handle. Maybe it's up 6 or 7% over last year versus 8 and 9 we've been seeing the last couple of months. So keep a lookout for that.
Thank you, everybody.
All right, everybody.
See you.